Hello, everyone. Good morning. It's a beautiful morning out here, and good morning to you from this part of the world. And depending on whichever region you're tuning in from, good afternoon and good evening. Unfortunately, we are experiencing some technical difficulties today. My camera has decided to malfunction, and despite all efforts to resolve the issue before the live session began was unsuccessful. As a result, I apologize that you won't be able to see my face today. However, I'm still here to provide you with insight and analysis into the assets on our watch list for this week. I'm hoping that these issues will be resolved soon. So by tomorrow, I think everything will be sorted out, as I have contacted the technical team as regards to that. So I hope that things will be sorted out tomorrow. So I'm very excited to be with you here this morning as we take another fresh new look at the financial market using simple and fundamental tools such as trend lines, key levels, and of course chart patterns to gain insight into the current market situations, while we also use that opportunity to review our existing positions if we have any, and of course strategically position ourselves ahead of both the London and the New York session today. So far this week we have been monitoring three major assets across board, which includes the US All Spot, the GBP USD, and of course the XAU USD. And in fact, we had some little bit of choppy market conditions yesterday, especially prior to the federal interest rate decision, which actually came in just as expected. So it wasn't really a surprise for everyone in the market. So we are going to be looking at the current market conditions and how we are going to be preparing ourselves for today, especially when we are looking forward to the Bank of England's interest rate decision coming up later today. And for those of you who are joining us for the first time, you are highly welcome on board. I'm very glad to have you around with us this morning. Well, you might be asking what this is all about. Well, as technical traders, we gather here every day to come together as a community and engage in follow-ups and review of our current positions. Our main focus is on preparing for the London and the New York sessions by utilizing fundamental tools. Well, this session usually kickstarts by 8:05 a.m. UTC technically and 9 a.m. West African time. So I highly recommend that you stay tuned in during this time so you don't miss out on the insights that we will be sharing. And by being active participants in subsequent editions, you will gradually enhance your understanding of our analytical approach, hereby allowing you to equip yourself with the knowledge and skills necessary to make informed trading decisions independently. So once again, you are highly welcome on board. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do in this community is to keep tabs with the fundamental factors that will be driving market sentiments today. And of course, you know that for those of you who have been with us for a while now, you know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. So on the economic calendar, we usually focus on high impact event coming in from economic dockets that affects the assets on our watch list. So for this week, considering the asset we are looking at, we are going to be focusing on the United States and the United Kingdom economic docket. So I will be taking out all the other economic features here and streamline it to only the United States and the United Kingdom. And then we are going to reduce the impact of these events to high impact one. So let's see what we have here. And when we do that, we should be having all right. So we do have a handful of events we are going to be looking at today. And all the events, all the high impact event, of course, is coming in from the United Kingdom economic docket. Now, the first one here is the monetary policy report. We have the asset purchase facility. And the most important one, which everyone is looking forward to, is the interest rate decision, which obviously majority in the market are projecting that it's going to remain unchanged. And as a result of this, we do not know how the market is going to anticipate it or react to it. But however, we know that the pound sterling has gradually gained some momentum in the last 24 hours, as you will see when we talk about it in a moment. Then we also have the MPC vote rate cuts, vote rate hike, vote rate unchanged. Then the Bank of England governor will be giving a speech, which everyone will definitely want to be looking forward to, as whatever he says today will be giving us an insight into the economic situations in the United Kingdom, and of course give us an idea into their monetary policy, and of course give us also an insight into the reason why the decision as regards to the interest rate was made later today. So with all the informations we have gathered here, the time frame of these events from the United Kingdom is going to be happening within 12 p.m. UTC and 12:30 p.m. UTC. So within the space of 30 minutes, we are going to be seeing all these events. So definitely we want to look out for how the market will be anticipating that event. Are we going to be seeing some patterns and structures we will be using to guide our decisions ahead of this event? So with that being said here, let's dive right into the business as usual. And the first asset we are going to be looking at this morning is going to be the US All Spot. I don't know why my US All Spot chart usually take a couple of more seconds before it loads up, but let's see. Let's allow this to load up while I see your comment, Fred. Good morning to you, Fred. How are you doing today? And glad to have you around with us this morning. Like I said earlier, my camera is faulty, so you wouldn't be seeing my face today. So I hope that things will get sorted out before tomorrow. And all right, so the chart is up right now. So the first asset we are going to be looking at this morning is going to be the US All Sport. And in fact, though from an holistic standpoint here on the 1 hour time frame, it's quite clear that price action has been on a downtrend situation, as price continues to find lower highs and lower lows since the beginning of this week. Now, during our live session yesterday, we actually saw, first of all, let me state here that we have been selling the US All Sport since the beginning of the week after observing that range between the $84.60 level and the $83.85 area, giving us an insight into the level of indecision at that point in time. And of course, you know how we do it in this community, especially when price falls into a range like this. We have no other choice than to exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And of course, we saw here how price never even got close to the resistance line, let alone thinking of buying this asset. So instead, price dropped to the downside. In fact, we had a couple of breakdown before the price finally broke down the structure as we rode that momentum all the way to the downside. And on Tuesday's trading session, we had a beautiful flat range too as well, which of course also guided our decisions as we also sold and added more position to our existing trade, had a breakdown of that support line. So it was quite a profitable first half of the week for us, and not until yesterday's trading session that we realized and noticed that we had a support line at the $80.85 area, an area which has been a barrier for sellers for about 12 hours, I think, before our live session yesterday. And I said here that though we have a bullish traction building up, the fact that price still remains below our descending trend line would not allow us to jump into that buy position right away, as it will now depend on how participants in the market react to this confluence around the $82 area and that descending trend line to determine if we are going to be selling or buying these assets. And one of the things we said here yesterday is that if price continue to reject this area, we'll look out for selling opportunities. But if price breaks out of that trend line, then we want to be looking out for buying opportunities above the $82 area. And of course, we did took advantage of that opportunity as price moved about 100 pips in our favor before sellers came in again to take us out of that position. And of course, if you had moved your stop losses accordingly, just like we usually do in this community, you must have been taken out with a moderate amount of profit on the US All Spot, or at a worst case scenario break even. Now, since the selling pressure came in, we saw price break down back below the descending trend line. In fact, I wasn't able to take advantage of that opportunity, as we all know what happened prior to the Fed interest rate decision yesterday. The market was gripped with a lot of choppy situations, and as a result of that, it makes quite a lot of sense that we stay clear of the market and wait for conditions to normalize before we start looking for new opportunities. So with no positions running at this juncture, what is going to be our next line of action? What are our plans for today's trading session? Are sellers going to continue the momentum to the downside, or are we going to be seeing a situations where buyers will build up some momentum and push price further to the upside? However, it is worthy to note that there are a lot of fundamental factors that are affecting the current price movement in this environment, as we know that the oil price is under pressure as both the European and the Chinese growth fall short of market expectations. So if you had been following the economic situations in both economies, things are not looking very, very well. The sluggish economic performance and concern over demand growth are causing a spillover effect on oil prices. And as a result of this, investors are very, very cautious and apprehensive about taking potential or significant positions on these assets. Now, with the situation we have here, we are going to be very, very cautious today, as we want to look out for significant confirmations before we want to jump into any positions today. Now, the first thing we are going to be taking into consideration is that descending trend line, which of course has been supporting that bearish momentum since the beginning of this week. Now, remember that we had this descending trend line marked out after connecting the series of lower highs, and not until yesterday that we saw the breakout of that descending trend line. And this is the first time price will be breaking out of that structure. So the question now is, will price break out of the descending trend line the second time, as the one that happened yesterday comes out to be a false one? So let us talk about the potentials of sellers here, because things are looking very bearish at this point in time. And if we consider the fundamental factors behind the psychology in this market, it appears that price may likely go to the downside. Now, as a result of this and the fact that we have a support line along the $80.85 zone, we shall be looking forward to the breakdown of the structure to sell the US All Spot. So personally, I will be having a sell stop order below this $80.85 area, where I will be looking forward to adding more positions at the breakdown of the $80 area if price action goes that far. Now, this is the lowest point price action has been for this week. Then I want to be marking it out, as we shall be using it to guide more selling opportunities if price continue the move all the way to the downside. However, if this is not the case and instead price breaks out of that descending trend line, then I would like to see some confirmations in the form of retest of structure, where the appearance of continued buy pressure will be giving us an opportunity to join the uptrend move. And in fact, we have multiple levels that we are going to be using to guide our trading decisions. So we have the $82 level here. If price breaks out retest, we want to be adding more position. We have the $82.80 area, a level which has been a strong selling niche since the beginning of the week. If this level gets broken to the upside, we do want to be looking out for more buying opportunities, and then the breakout of the $83.85 level will welcome more buy positions. So that is how we are going to be managing a trade on the US All Spot today. And as you will see, that descending trend line here is going to be playing a major role in determining the direction of price action today. So if price remains below the descending trend line, then we want to be looking at anywhere below the $80.85 level to join the bearish momentum. But if price breaks out of that descending trend line, then a retest of structure will be a good confirmation to join an uptrend move. So these are my views here on the US All Spot for today. If you have any questions as regards to my explanations, or you need me to do any further clarification at any point, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds as usual to see if there are any questions whatsoever before we move on to the next assets on our watch list. And you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right, so in the absence of no questions, I want to assume that we are on the same page. And in that regard, we shall be moving on to the next asset on our watch list. So the next asset on our watch list for today is the GBP USD, the cable market. And in fact, this week, this current market condition has been consolidating since the beginning of the week. As you will see that if we go to as far back as the first day of this week, you will see that price is confined within a range right now. It's a very wide one between the 1.21990 level and the 1.21060 area, to emphasize the level of indecision in this market at this point in time. And in fact, it is expected that this situation in the market is actually expected, as we all know that today the Bank of England's Monetary Policy Committee will be convening to determine the course of the monetary policy and, of course, make a decision if the interest rate will be increased or not. But it is widely expected that the Bank of England will maintain the base rate at 5.25%. So we want to see if there's really going to be an interest rate hike, or we are going to be seeing the rates remain unchanged. But everyone feels that it's going to remain unchanged due to how the current interest rate is crippling the economy at this point in time. Credit facilities are very expensive, and if there are no credit facilities, this affects medium-term businesses in such a way that they can't run the business as usual. Employment rate reduces and the like. So it's really, really very tormenting for the economy at this point. And as a result of this, everyone believes that interest rates will remain unchanged, but we are still going to look forward to see what it will look like. And of course, the anticipation of this event is telling its toll on the current market conditions, as market participants are trying not to risk too much on whatever position they are taking at this point in time because of what is coming up today. Now, if we look at things from a technical standpoint on the chart, for those of us who are part of our live session at the beginning of the week, and for those of you who watch my video on the GBP USD during the course of the weekend, the first thing we observed on the 1 hour time frame is the fact that price action has been bullish since last week. Is it in the last 2 weeks? Yes, I think the last 2 weeks, I guess. I think it's the last two. No, in the last 1 week, yes. Price has been very bullish. And in fact, to emphasize that, we have a couple of ascending trend line, which we identified after connecting the series of higher lows. And one of the things we agreed here at the beginning of the week is that as long as price remains above the ascending trend line, we continue to look out for buying opportunities. And the only condition that will make us to sell in this market is when price significantly breaks down the ascending trend line, does a retest of structure, confirming that sellers are going to be dictating the pace before we want to jump into any sell position. Until this moment, we are yet to get any significant signal of such, as price still remains above these trend lines. Then, in addition to the trend line, is this beautiful range we identified at the beginning of the week, which is situated between the 1.21330 level and the 1.21060 area, which emphasized the level of indecision at the beginning of the week, where we were looking out for the breakout of the resistance line of that range to give us an opportunity to buy. And of course, we did took advantage of that opportunity, as we have seen here that since the beginning of this week, price action had continued to find buy pressure above these levels. Even during our live session yesterday, we talked about the fact that we do want to be buying above that area too as well, and we decided to add more positions if price continues to climb up, breaking out of structures at the 1.21600 level and the 1.21750, and finally the 1.21990 area to capitalize on that uptrend continuation. However, at this point in time, I'm already out of all buy positions, as I moved all stop losses to this area around the 1.21600 area, and it appears price got into that area, taking me out of that position with a moderate size of profit. And I do believe that you've done the same, because we mentioned this during in my commentaries on both my TradingView and Telegram platform, that we do want to protect our current buy position because of the intended volatility that is likely going to happen prior to the Bank of England's interest rate decision coming up today. Now, with the situation we have right now, based on what the current market structure is, how do we intend to prepare ahead of today's trading session? Are we going to be buying, or are we going to be considering selling? Well, the first thing I would like to state here is that the market is consolidating at this point in time. As I mentioned earlier, that price is currently confined within the 1.21990 and the 1.21060 area to emphasize the indecision going on in this market. And we all know why this is. Major key players in the market are stepping aside, waiting for what the data from the interest rate decision will be, and of course listen to what the Bank of England will be saying as regards to the economic situation of the United Kingdom, which of course will be giving us clues into how to position ourselves in the nearest future. Now, because of the fact that price remains within a range, you know how we do it in this community, especially when price falls into a range, we want to exercise patience and wait for significant signals to come on the chart before jumping into any positions. Now, if I want to feel confident buying the GBP USD today, I would rather want to see price take out the highest point where price action has been for this week, which is at the 1.21990 level. Now, this is what I want to be looking out for to buy. However, I could take advantage of buying opportunities even before the breakout happened if I see convincing market conditions that evolves on this chart. And one of the things I want to see is a double bottom structure, a reversal pattern. Now, if we take into consideration this impulsive move that started during the later part of the New York session yesterday, bringing price back into that high at the 1.21990 level, I want to see some retracement move back into either of these ascending trend line where the appearance of buy pressure transitioning into a potential reversal pattern, maybe a double bottom structure, a head and shoulder pattern to give me clues that we are going bullish. And of course, you know that when we identify a reversal pattern, we want to be marking out the neckline where the breakout of the neckline will be giving us an opportunity to join that uptrend move. And in that case scenario, we can capitalize on buying opportunities even before the breakout of the 1.21990 level happens. So this is one scenario I want to be looking out for to be part of an uptrend move. And if there is any significant setup that comes up on the chart prior to the event, definitely I will be sharing them with you in the comment section of both my TradingView and Telegram platform. So let's see how the market will play out here. So these are the conditions I will be looking out for to join an uptrend move. However, if price continues to drop to the downside, breaking down the ascending trend lines, then at this point I want to start considering selling. Now remember what I said here yesterday, that we are not jumping into a sell position right away as soon as price breaks down the ascending trend line, as we want to see some confirmations before we consider selling. And one of the things we want to be looking at here is a breakdown of that structure happen. First of all, significant breakdown, price retraces back into the structure and then continues setting pressure, showing us that buyers are finding it difficult to climb back above the ascending trend line will now be a beautiful opportunity to join the decline to the downside. So this is how we are going to be capitalizing on any selling opportunities in this market today. However, if you are profitable so far this week and you do not have the time to wait for all these retracement move to happen, well, you can easily set a sell stop order, since you can be risking some of the profit you had made so far this week to test waters and see if this move is going to work out. So that is how I intend to plan my move for today. And I encourage you to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today's trading session. So if you have any questions at this juncture, I would be taking some 10 to 15 seconds off to see if there are any questions, while you also use that time to mark out these levels on your charts. All right, so in the absence of no questions, I want to assume that we are on the same page, and in that regard, let's move on to the last asset on our watch list for today. So the final asset on our watch list for today is my favorite, and that is the XAU USD, popularly known as the gold spot. And in fact, I already have a buy position triggered at this point in time, as you will see that the market, as we begin to see some resurgence of buy pressure, especially during the Asian session. And one thing I would like to say here is that this newly resurgent buy pressure we are observing on this chart is maybe connected to the ongoing decrease in the US Treasury bond yields, fueled by expectations of the Federal Reserve halting interest rate hikes continue to support this demand. Now, yesterday we saw the interest rate remain unchanged, and there are chances that according to what Powell said last month as regards to interest rate, that they are looking at cutting interest rate by the first quarter of next year. And it appears that things are going in that direction right now. So we already have two monetary policy meetings where interest rates has remained unchanged. And if this goes on like this, it's becoming more visible that interest rates will be cut by next year, hereby making the US dollar a little bit less attractive at this point. Now, from a technical standpoint, if we look at the current market situation, it is quite clear that we have a demand zone around the $1,980 level and the 1,975 area. As you will see that since Wednesday of last week trading session, this area has been peculiar with buying opportunities, as every attempt by the sellers to break through the zone has been met with strong resistance from the buyers. Well, despite since the beginning of this week, we noticed that price action has been on a bearish momentum. As you will see, we have been witnessing some lower highs, which led to the breakdown of that ascending trend line. And as a result of these lower highs, we have this descending trend line to work with. Now, despite the lower highs in this market, which of course reveals the character of sellers in this market, you can see how this area, which happens to be our key level, which we identified at the beginning of the week, has become a major barrier to negate all attempt by the sellers to break through that area. Now, with this situation here, for me, the fact that price still remains above this demand zone, I still want to hold on to a bullish bias here. Now, if we take into consideration what happened in the last 48 hours, you remember we saw this descending trend, this impulsive bearish move to the downside. And as soon as price got into that demand zone, we saw a sharp rejection back into the trend line. Price dropped back again into the support zone, and price was unable to break through and settle below this level. And if you look at what has happened here, it appears that price action is gradually transitioning into what looks like a reversal pattern in the form of a double bottom structure. And technically, the double bottom structure is considered to be a strong reversal pattern. And you know what we do whenever we identify the transition of price action into a potential reversal pattern. The next thing we want to be doing is to mark out the neckline, which interestingly lines up with that $1,986.50 level. Now, for us to validate this reversal pattern and make sure that, okay, this reversal pattern is likely going to be dictating the pace for the second half of this week, we want to see price break out of that neckline to incite a buying opportunity. And one interesting thing about the neckline is how it shares a beautiful confluence with that descending trend line. So if price action breaks out of both the descending trend line and that neckline, I want to feel confident buying the XAUSD, and coupled with the fact that price is sitting above a robust demand zone around the 1,980, 1,975 area, which of course has been difficult for sellers to break through since last week's trading session. So I still hold on to a bullish bias as long as price remains above that descending trend line and the $1,986.50 level. And of course, you know, we want to have in our stop losses just right below the descending trend line, which will be dovetailing to about 70 to 75 pips stop loss on this one. So let's see how the market will play out above this area. And in fact, if price continues to find new highs, then a breakout of the 1,995 level will welcome more buy position, and a further breakdown of the $2,000 mark will be welcoming more buy position as we continue to ride the momentum all the way to the upside. However, in as much as we are looking out for buying opportunities, you know how we do it in this community, we also want to keep tabs with the opposite direction as well. Now, if we are going to consider selling, what is it that we want to see on this chart that will make us feel comfortable selling this asset? Now, if you remember vividly what I said here in the last couple of days now, I laid emphasis on the fact that I will need price action to break through this demand zone at the 1,980, 1975 area before I want to consider selling. And to give a visual representation of what I mean, we want to see price drop back below the descending trend line, leading to the breakdown of the zone. And in fact, I would need some confirmation as like a retest of structure to incite a downtrend continuation. So this is the only criteria or condition that will make me want to consider selling the XAU-USD for today. But as long as price remains above the demand zone and that descending trend line, we remain bullish in this particular market. And to give you a summary, a visual summary of what all this is all about, if you look at the structure closely, you will see that since the Tuesday trading session, price action had remained confined within the $1,986.50 level and the $1,974.50 area to emphasize the level of indecision going on in this market. Now, the direction of the breakout of this range will determine where the trajectory of price action will be for the later part of this week. So if price breaks down the $1,974.50 level, then we want to feel comfortable selling. And if price remains above the $1,986.50 area, we want to feel comfortable buying the XAU-USD for today. So these are my views on the XAU-USD. And if you have any questions, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we round off for today's trading session. So I see your comment here, Fred, and Fred is asking that is it a good practice to use a buy sell stop order or to wait for a breakout and retest before starting a trade? Well, that's a very good question, and in fact I've been emphasizing on these times without number in this community. Now we have an analytical approach to taking advantage of trading opportunities whenever we identify trading setups on our charts, and there are two ways to which we can do this. Now the first one is for those of us who have been profitable in a particular asset. That is, if you have been profitable so far, there is a way you want to be attending to entry levels. And for those of us who are not profitable, for those of us who are new and probably taking a position for the first time, there are ways to which we can attend to entry levels. Now, for the first part, for those of us who have been profitable so far this week, and you've already scooped in a significant amount of profit, you can afford to leverage on the profit you had made so far this week by risking an entry above or below the level we have identified here. So what this simply means is that you can place your buy stop and sell stop order, whatever, place it at that entry level, and if it doesn't work out, you know that you are only risking some of the profit you had made so far this week. However, if you are joining for the first time, it is very reasonable that you exercise patience and wait for a retest of structure to happen, giving you confirmation that truly that direction of breakout is valid. So this is how we have been doing this in this community in the last for so long, and I always emphasize this at every session we have. So I do hope I clarified that, Fred. Please let me know in the comment section if I did, and if you still have further questions, feel free to let me know in the comment section. All right, Fred. So I'm glad you found that helpful. And in the absence of no questions, I would want to round off on our session for today. And I just dropped the link to the XAUUSD live window right in the comment section of this current video you are watching. And you want to click on that link, click on the notify me button so that you can get notified as soon as we come on live. So the XAU as a live session usually kickstart about 5-10 minutes into the New York session. And this, for those who don't know, the XAU as a live window is a platform which was born out of popular demand in this community, where we all come together to monitor real-time price action on the gold spot assets throughout for the first 6 hours of the New York session, and be part of the session to see how we actually take advantage, anticipate new positions, how we move out, protect our positions, and of course how we intend to take advantage of situations that goes in against us. So you want to be part of that session and be in the comment section to keep the energy alive during that session. I look forward to seeing you all in that session. For those of you who had liked my this project, thank you very much for doing so. And for those of you who haven't, please, the cheapest and only way you can support this project is by clicking the like button. So if you have found this content helpful and useful, please give the video a thumbs up, and I'm very grateful that you do so. And it's on this note, okay, for those of you who are joining for the first time, I do hope you are able to gain one or two things from what we discussed here today. And in fact, I do encourage you to be part of the subsequent editions, as the more time you spend with us, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. So on this note, I wish us all the best of luck. I'm very sorry you are not able to see my face today. Like I said earlier, we're having technical issues with the camera, and I've contacted the support team to help me resolve this, and hopefully this will be resolved by tomorrow, and we get to see ourselves tomorrow as well. So on this note, I wish us all the best of luck, and I look forward to seeing you all in the comment section of both my Trading View Telegram platform and of course during the XAU USD live window as we continue to monitor price action. Do have a wonderful evening, everyone. Bye bye.